The markets are absolutely puking right now. You can see the red all across the board. Let's get into it right away. What's going on? What's happening? The Federal Reserve just released their meeting minutes and it confirmed what we saw in their statements. This isn't a surprise. The market should have been aware of this. But if you look at the technical analysis, it would have indicated this already. We are already pricing that in if you had been paying attention in what I posted and also the video I had done previously, but the views keep going down, so less people are aware of this information. You could see Federal Reserve releases the meeting minutes from its December meeting, and no surprises here, okay? As expected, the Federal Reserve's policy-making group kept its benchmark rate near zero. Officials indicated that they foresee up to a 3/4 percentage point increase in 2022. So we are going to this level in which I have noted many times before that would be, quite frankly, very restrictive. 0.75 to 1.0 on a very crude way that I have looked at this previously. We went from about 5.5% at the peak prior to the financial crisis. Then they tried to raise them again. They got about less than 2.5%. And now this time, I think they're only going to be able to get to about 0.75 or 1% before entering into crisis mode. But here we are, as well as another 3 hikes in 2023, and then 2 more the year after that. Now, that's way too far out into the future to be able to determine anything. But when I look at this right now and I see 2022, we are noting right now, this is what the Fed is doing. All the central banks around the world are doing the same thing, okay? In addition, the committee announced that it would speed up the tapering pace of its monthly bond buying program. Remember what they say here. They're going to speed up the tapering. It doesn't mean that they are going to stop printing. It means they are going to print less every month. So the balance sheet is still expanding. I think people have that term confused because tapering doesn't necessarily mean reducing of the balance sheet. We're talking about tapering purchases. We need to be very clear about that. Okay. So you could see here under the new plan, the program would now end around March, after which it would free up the committee to start hiking rates. So the desire here is to not touch interest rates at all until the balance sheet, until the interest rates, I should say, until the balance sheet purchases have normalized, until they basically go and print no more new money. That's the plan. We'll see what happens. But anything could happen in between now and then, right? Still a couple months away, so we'll see. Current Fed funds futures market is pricing, indicating a 2-to-1 chance of the first hike coming in March. That would be very early. We don't know. I mean, there's nobody who actually knows, but quite frankly, I think it's important to address it as the information comes out. If you want the actual Fed meeting minutes, they are right here. Okay, I will include those links in the description as always. It's kind of boring. Actually, it's really boring, but you could see it for yourself, okay? Because they're basically suggesting, what the sort of the talking heads have been saying. Yes, they're seeing slower growth. They are seeing a little bit of this inflation creeping up for longer than they had wanted to, and so on. Okay. But if you look at what's going on in the markets, let's see if I can show you this really quickly. This is the S&P 500 right now. This is the daily chart. So you're looking at this red candle right now. The market, the S&P, down 0.78% as I record this video. If you look at the Dow Jones, right now, even that fell into the red. Okay, the Dow fell into the red at this time. If I show you what's going on in the broad indexes, you can look at that. Okay, so we're looking at the S&P, the Dow Jones, the NASDAQ, and the small caps being the Russell. But look at what had happened. I mean, let's go back to this one. If I show you here, well, that was the QQQ actually. If I show you the SPY, it's the S&P 500. We got to understand here, when I showed you this previously, a few days prior to the new year, I was noting this looks like we are topped out for the short term top out. And right now, we could start to see that this indicator, this is a stock RSI indicator, is looking like it's probably heading down before it heads back up. And this is kind of a momentum indicator. This kind of tells you how much optimism there is, in a sense, if you want to look at it like that. We hit the top Bollinger Band on this particular day right here, and this is when I posted. I believe it was one of these days in here. If you also remember back on December 20th, I did this video, or maybe it was the 21st. No, I think it was on the 20th when I did the video, and I specifically stated, look at what's happening right here. We've got the bottom Bollinger Band being hit, the bottom of the support. Let me pull that up really quickly. The 100-day moving average right here. The market is likely to go higher from this point. And look exactly what happened. That's exactly what happened. 5 days in a row of absolutely just going crazy up on the way. But at the same time, we started to see this slowdown that happened after the days following. Now, that has been sort of choppy all around. Now, what does the market need to see? What is going on? Your GPS, just tell me, just lay it out for me. Well, this right now, they need to see reassurance from the Federal Reserve that there isn't going to be this, rush to increase rates and everything. They need to calm down the markets. How do they do that? There's going to be Fed meetings that are coming up, and the statements that will be put out, and there'll be interviews with Jerome Powell and the chair of this and the president of that, and all of those individuals will come together and they will give their positive messages. Don't worry, everything's going to be okay. But in the meantime, people who are actively trading this information, I mean, it was very clear. I tried to do the post. I posted it on my, the blogger community section talking about that. I literally can't give you the trade advice, the financial advice. Not enough people are asking for this information, and the views are quite low, which tells me that people are not interested in the information. But you got to let me know. I'm trying to cover it as much as I can, and then that's it. But anyway, I appreciate you coming here. If you appreciate this information, hit that thumbs up button. When you do so, you support the channel, and on to the next one. Take care.